Well, folks, Opendoor warrants hit the books on Friday. We will cover that news, including a new institutional buyer into Opendoor. Also, we will cover the Stonkcast watch list with the new addition there and the major macro themes, including President Trump's proposed peace plan for the war in Ukraine. Also, we will cover the Federal Reserve, which now looks likely to cut rates in December, and we will also cover the crypto crash. All that and much more on this week's market prep video. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to share with a buddy. Don't forget to like, subscribe, follow us wherever you listen to podcasts. And now, folks, as always, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe, whether you're a diamond-handed degenerate or a more conservative swing trader or investor. We've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, it's time for the market prep video. I hope everyone is having a fantastic weekend. What a week we had in the markets last week. We saw one of the worst sell-offs really to begin a month since April for the overall market, as AI valuations are still a bit sketchy and there's some other froth and concerns really in the overall market. We saw Nvidia, the largest company in the world, report earnings that were great, and then we saw the market give all of that back on Thursday. So we got a lot to get into, but first we got to kick it off with the most captivating story in the market right now, which is Opendoor. So one of the things that I want to point out here as it relates to Opendoor and just really the crazy couple weeks that we have had with this particular company, we had the warrants, right? The warrants that finally dropped on Friday. For those that are invested in Opendoor, if you check your brokerage account, you will now see, hopefully, that there are warrants available to you. So we got that news. We also got a new institutional buyer for Opendoor. So we're going to cover all that here in this article by Tech Stock 2. So first of all, why Opendoor rallied. So D.E. Shaw stake plus Fed rate cut hopes. So first of all, D.E. Shaw discloses a 6.4% stake. So a big piece of today's coverage centers on a new regulatory filing showing that hedge fund D.E. Shaw now owns about 6.4% of Opendoor as of November 13th. And if we come on over here to Fintel.io, and we go to the institutional tab, you will see here as of the filing, which was November 20th, you have a 13G filing, and now D.E. Shaw & Co. LP has 6.40% ownership in Opendoor. They bought up nearly 61 million shares of Opendoor. So they actually have more than Jane Street and really only second to Vanguard. So definitely a pretty sizable stake there for D.E. Shaw. And, you know, here's the thing. A lot of people have been speculating as to whether or not this is a legitimate long position or if it's just, you know, more strategic around the warrants. You know, it's anyone's guess, right? Anyone can speculate as to why D.E. Shaw bought up these shares, but nevertheless, they now own a pretty sizable stake in Opendoor. So I think that's very interesting. So as this article lays out here, the key details, the position is held primarily through D.E. Shaw Valence Portfolios, which is a short-term trading focused fund, not a traditional long-only vehicle. A similar move in late September when Jane Street revealed a 5.9% stake also triggered a multi-day rally in Open. So as analysts at TipRanks and Coin Central note, reinforces the narrative of increasing institutional interest in Opendoor, which is evident, and also may be tactically linked to Opendoor's special warrant dividend since funds needed to hold shares as of the 18th of November to receive those warrants. So, in other words, D.E. Shaw may be playing the warrant math, not necessarily making a long-term bet on Opendoor's business. As I was saying, this is, you know, I guess if you want a more pessimistic view from the bull camp on Opendoor as to why D.E. Shaw is getting involved, you know, essentially saying they don't really believe in the long-term vision. They're just trying to take advantage of these warrants that the company is now releasing, now distributing. So Nevertheless, though, it's very interesting to me that it's such a sizable stake, 6.4%. Again, second only to Vanguard as far as some of the public institutions, public firms that have taken stakes in Opendoor. So found that very, very interesting news there. And especially on the back of a week that saw a lot of downward pressure, definitely feels like, buying the dip, so to speak, from an institutional standpoint. Also, you got rate cut optimism boosting housing sensitive stocks. The second driver is, macro, after comments from New York Fed President John Williams about potential further adjustment in policy in the near term. Traders increased the odds of another rate cut in December. We're going to cover that during our macro, theme later on in the show. But there has definitely been a shift in really just the overall view of whether or not we're going to get a December rate cut. And I think it was part of the reason why we saw such bullish momentum out of really the broad market on Friday. So this is another reason why Opendoor kind of got a lift on Friday. And then special dividend lands. So the new OpenW, OpenL, OpenZ warrants explained. So the other major story hitting feeds on Friday is the formal distribution of Opendoor's special warrant dividend, which was paid on Friday, November 21st, 2025. According to the company's press release, the record date was November 18th. Distribution date was November 21st. Who got them? All shareholders of record as of the record date, that record date being November 18th. Certain holders of the company's 7% convertible notes without needing to convert, so they also got it. And then what did each shareholder receive? As we've covered before, for every 30 shares of Opendoor that investors have, they received one series warrant, whether it be Series K, Series A, or Series Z. No fractional warrants. Allocations are rounded down. So now the Series K has an exercise price of 9, Series A, exercise price of 13, Series Z, exercise price of 17. So now we are done, in a sense, with all of the, basically the warrant news from this past week. We saw a lot of funky action happening on the options chain and really just with the overall price action on Opendoor due to the warrants, I believe, from this past week, along with the fact that the overall macro market was down. We've been seeing a lot of weakness in the market really over the past week and a half. So you had that. You also had the fact that you had the warrant situation going on with Opendoor, but now the dust is settled from all of that. We got the distribution of the warrants, and now we can proceed accordingly, at least as far as I'm concerned. So taking a look here at the chart for Opendoor, and, look, we did get all the way down to right around $6 on Thursday after hours into Friday pre-market. But then on Friday, along with the overall market, which did see a bounce, we were able to close green, which is nice. We were up 13% intraday, closed out the day up 9.5% on Opendoor, closing at 675. And we basically ran into 3 different levels of resistance as far as I'm concerned. You have the descending level of resistance from that 3-year high that we had back in September, and we ran into that on Friday. You also have the 38% Fibonacci level, which is 692, and you have the 5-day moving average. So we ran into really all 3 of those, and it makes sense. We saw some supply there. We saw some selling pressure. So we were not able to get a clean close above that. Would have loved to have seen that. But it was still nice to see, a green day. Now, technically, we are still in this downward trend, right? From the highs that we saw a couple weeks ago. I don't believe we're out of the woods yet. I want to see us get back above 7 first of all, right? And then see if we can make a move back up to that next fib level of 844. And here's the thing. With Opendoor, it's a volatile stock. You're going to see volatility to the upside like what we saw here back in early November, right? This 80% rally. And you're going to see volatility to the downside as well. And this is essentially what Eric Jackson has said as well on Twitter. If anyone's been paying attention to any of his posts, he's essentially saying look, you're going to get volatility on both sides with Opendoor. It makes sense after an 80% run. You're going to see some profit taking. You're going to see some give back. That's essentially how he is describing what we've seen over the past week and a half in Opendoor. But one interesting thing that I did see on Friday was the volume. So we've seen the volume since really the high that we had on November 12th, really just descending. And then we finally got a break above that as far as volume goes on Friday. So we may be seeing the beginning, right, of a reversal here, seeing some volume return after we've seen volume kind of dissipate, right? And I think a lot of that too is due to the warrants. So now that that's situated, maybe we see, a lot of volume return to, Opendoor. So, but as of right now, we are below that 38% Fibonacci level. I want to see us get back above that. And if we do a quick check-in on the options chain for Opendoor, so obviously, you got the warrants that are getting listed, excuse me, and because of that, you're seeing a lot of funky labeling, at least on my platform with Thinkorswim, as far as the options chain right now. And here's the interesting thing. With the options chain, when we were waiting for the distribution of the warrants, basically the options volume was very minimal. We saw like 200,000. And so another sign that things are getting back to normal on Opendoor is the fact that we've seen the volume return. I'm not necessarily convinced it ever went anywhere. I think it just wasn't necessarily being reported. Nevertheless, these are the numbers that we had from Friday. You had 6 million contracts transacted, and keep in mind Friday was also a monthly expiration on the options chain as well, so you had a lot of volume, maybe people rolling positions, closing positions, exercising, things like that. So we saw 6 million in volume on Friday, and you had a put to call ratio of 0.38, so very bullish overall theme on Opendoor. So that's where we stand right now. If we zoom out, look, we are still in a good position as long as we're above, 570, in my opinion. That is the 50% Fibonacci retracement level from the 3-year highs of 1087. And you can see here that I have a couple descending levels of resistance I'm paying attention to. Again, want to see a clean break of this initial one here. And then this was a second one that I drew out based off the high that we saw on November 12th. But, as of right now, it looks like we're getting volume returning. Obviously, if the overall market is up, that's going to support and help Opendoor. But I think you got a lot of interesting things going on with the new institutional flow, the new 6% stake from Shaw. In addition to that, the warrants are now distributed. In addition to that, the Fed rate cut odds for December are ticking back up after some of the commentary we got from the New York Fed president on Friday. And so, there are things, I believe, that are kind of turning the corner, so to speak, for Opendoor. Now we just need to see if we get the follow through on it. I still believe in the near-term, long-term vision of the company, but in the short term, everything is going to be dependent upon, getting back above 7, seeing volume return, and getting some breakouts. So we will see what the week looks like ahead. Obviously, we got Thanksgiving coming up, a shortened trading week. But let's see what we can do on Monday and Tuesday, especially. We got some key economic data coming out, and I'll, of course, cover all that later in the show. Now, let's move on to the Stonkcast watch list. Some other tickers you need to be paying attention to. First of all, one of the stocks that I want to talk about here is Lightbridge. Lightbridge is being added to the Stonkcast watch list. For those who are not familiar with Lightbridge, they engage in research and development and commercializing nuclear fuel. It develops nuclear fuel for water-cooled reactors and metallic fuels under the Lightbridge Corporation, headquartered in Virginia. So basically, we're talking about a nuclear play here. And given the fact that President Trump has really, been emphasizing in the AI race, need for fuel, need for more energy, right? The fact that the U.S. is exploring nuclear energy to support the AI race that, multiple nations now find themselves in, I think plays well for a company like Lightbridge. And we've seen a pretty massive move in this over the past 9 months. We saw lows of $6 here, back in April, excuse me, but we have seen recent highs all the way up to $31 in mid-October, and over the past couple of weeks, it's had quite the dramatic sell-off, all the way down to $14 as of Friday. So pretty big haircut from that $31 high, and we are running into the 200-day moving average. But this is a company that I would be looking at for the near term, long term. I like it. I like it as a good position trade, swing trade, and the fact that you're running into the 200-day moving average could end up being a dynamic area of support where you could take a position. As far as the options chain, not much going on here at all. I wouldn't touch this thing as far as options go. There was only 2,000 in volume on the options chain on Friday, so very, very illiquid, options chain. But as far as buying up shares, taking positions, right, that's how I would approach Lightbridge if you're interested. Another one here is Grab. We've talked about Grab before. It unfortunately did not hold the 200-day moving average. It looks like we cracked below that on Thursday and Friday. So, this is another one for the near term, long term that I like. And one notable thing here, if we look at the RSI for Grab right now, we are technically in pretty extreme oversold territory with the RSI sitting at 27. So I would wait for that initial green candle, maybe a higher low. But, this is getting into a situation where it might be interesting to take a position. So also Bitfarms, which has been getting beat up right along with crypto, especially Bitcoin, of course, since this is a Bitcoin miner. Closed at 243 on Friday. Still has not really found a floor yet. I would still be waiting on this one to find a floor, set a higher low. But coming off those 660 highs, Bitfarms, especially with the volume and interest around it, as we talk about a lot of these data center plays, it's hard to ignore. So yeah, right now on the chart does not look that great. Is it going to stay beaten down like this forever? I don't believe so, which is why I keep talking about it, because we could see a pretty nice move in this. And then also Lemonade. So Lemonade is a small cap. Small caps have kind of been sporadic with the rate cut odds for December. We did come off those highs of 83 on Lemonade, closed Friday at 67 and change. But this one, out of all of them, I think really has the most healthy, bullish looking chart, given the fact that it is above the 50 and 200-day moving average. Again, another one to keep an eye on. We might see some more weakness in the short term. If so, I'm expecting a gap fill from the earnings call right here. Basically, this high of 63.48. So I want to see a gap fill there. We almost had it on Friday, had a low 64.05. But first, I want to see that gap fill before I take a position to the upside on Lemonade. So these are some of the stocks that I'm paying attention to. And if you got anything you want to add to the Stonkcast watch list, make sure to leave a comment and let me know. And I would be happy to check it out. All right, now let's move on to some of the major indices. First of all, I want to take a look at SPY, the ETF for the S&P 500. And, we got basically the Fibonacci level set out for the year, right, on SPY. And we are not that far off from the 23% Fibonacci retracement level, which on SPY would be 640 and change. We closed Friday at 659. We did manage to put in a green day, but definitely not overcoming yet that massive red candle that we had on Thursday. So, Nvidia, Nvidia had good earnings on Wednesday. Initially, the reaction overnight into Thursday was good, and then we just ended up giving it all back. So, as of right now, the RSI for SPY is sitting at 41, and we are below the 50-day moving average. And we have been below that now for 5 days. So not great. And we saw quite a bit of volume happen there on Thursday with that massive red candle that we saw there. So, on Monday, what I'm looking for, especially on a shortened trading week, I don't really have much as far as expectations for the week. We're probably going to see light volume heading into the holiday week, but would love to see us get back above that 5-day moving average, especially with some of the data we'll be getting on Monday, Tuesday. So we'll pay attention to that. Also, quick check-in on the tech-heavy NASDAQ via the Qs. And the Qs did touch that 23% Fibonacci level, and we did manage to close green. So that's great to see. That happened on Friday. This also is below the 5-day moving average and the 50. I want to see us get back above that on Monday. The Qs were up, 0.75% on Friday. Quick check-in on IWM. And this is the Russell 2000 ETF. IWM had a pretty good day with the rate cut odds for December ticking back up. The probability of a 25 basis point cut, that is. And so we saw a pretty good day out of IWM on Friday, back above the 23% Fibonacci level, back above the 5-day moving average, which is great to see. And I would expect, if we do get a December rate cut, I would expect IWM to be at a new all-time high, which was previously 252, closed at 235 and change on Friday. Quick check-in on the VIX. The VIX as of Friday's close is at 23, still above 20. Anytime the VIX is above 20, there's uncertainty in the market. Anytime it's below 20, there's a lot of confidence in the market. So we're still seeing some uneasiness in the overall market due to, again, AI valuation concerns, Fed rate cut concerns, private capital concerns, all types of concerns, right? People think the market's getting a bit frothy, and we're seeing that reflected in the VIX right now. However, we did see it come off from 27 on Friday, so that was good to see. And quick check-in here on Bitcoin. At time of recording, Bitcoin is down 0.5%. And this is, folks, Bitcoin has taken a big haircut from those all-time highs, up near 124,000. At time of recording, we're at 84,500. Not too great. And we're basically toying around with, at this point, the 50% Fibonacci retracement level. And this is based off of, the past year, I believe, if I'm not mistaken. Or maybe this is actually the past 2 years. Yeah, so this is a Fibonacci Fibonacci level laid out for the past 2 years. And yeah, so we are getting pretty close, and I believe we actually did touch that 50% retracement level on Friday, as you can see here, and then managed to come back up here. So not a bad close on Friday, but we've just been seeing such weakness in Bitcoin. A lot of liquidations, a lot of leveraged accounts getting liquidated, and you're seeing the result of it here in Bitcoin. So hoping we can find a floor right around this 80 to 84,000 level on Bitcoin. If that fails, I would not be shocked to see us drop all the way down to 70,000. Hopefully that doesn't happen. But I mean, look, as of right now, the overall market theme, when we talk about the fear gauge, right, for the market, if I just pull that up for just the overall, where's it at? Here we go. Fear and greed index, according to CNN, right? We're in extreme fear right now, folks. Currently sitting at 11, according to CNN, on their fear and greed index gauge. And I mean, if we just take a look at where we were at a week ago, we were at 21, a month ago, 28. A year ago, we were in greed at 56. So right now, a lot of fear in the market. And according to Warren Buffett, this is when you want to be buying, right? There's a lot of things that go into the fear and greed index here. I mean, we're looking at, stock price breadth, put to call options, market volatility, safe haven demand, junk bond demand. So they're looking at all that. But basically, all you need to know right now, there's a lot of fear in the market. And, I've always said that Bitcoin is really a risk-on asset. So when you see this coming off, you can typically expect the equity market to follow suit. And unfortunately, so far, that's what we've seen. So we'll see what the week ahead looks like, though. And we got some more news on crypto, which I'll get to here in a minute. But this is TradingView for anyone interested. Check the link in the description and get $15 off. Now let's move on to some macro news. First of all, I want to take a look at this piece here from the Wall Street Journal. Trump says he wants Ukraine's answer on peace plan by Thursday. So President Trump said he wants Ukraine to accept a sweeping U.S. deal to end its nearly 4-year-old war with Russia by Thanksgiving, giving Kyiv less than a week to decide whether to agree to a draft plan that would make major concessions to Russia. Thursday is, we think, an appropriate time, Trump told Fox News Radio's Brian Kilmeade in response to a question about whether he has given Ukraine a Thanksgiving deadline to agree to the plan. Trump suggested he may extend the deadline if things are working well. Later on Friday, when asked by reporters about Ukrainian President Vladimir Zelensky's reaction to the proposal, Trump said he'll have to like it, and if he doesn't like it, then, they should just keep fighting. At some point, he's going to have to accept something, Trump added. The 28-point U.S. plan includes territorial concessions, a cap on the size of Ukraine's active duty military, and other provisions that were previously rejected, the Wall Street Journal has reported. Zelensky acknowledged Friday that challenges facing his country now is one of the most difficult moments in our history, he said in a video address. Now Ukraine may find itself facing a very difficult choice, either loss of dignity or the risk of losing a key partner. So Trump is essentially putting pedal to the metal here, trying to get a resolution between this Russia-Ukraine war, which has been going on and on. Now, the reason I bring up this story on Stonkcast, which is, not really a political show, but a market show, of course, is because one of the stocks that I've been paying attention to is Intrepid Potash. So for anybody who is unfamiliar with this particular company or why I might be bringing it up, they basically deliver potassium, magnesium, sulfur, salt, and water products. Basically, we're talking fertilizer, right? And when we talk about Russia and Ukraine, they are some of the regions where a company like Intrepid Potash would be doing a ton of work. Obviously, they haven't been able to because of the war that's been going on for 4 years. But if we see a peace deal happen there, Intrepid Potash could very, very well be in play again. And just as a reference point here, I mean, if we just take a look at the 10-year chart for Intrepid Potash, if we just kind of zoom out here, this company has really been in a base for, what I would say, basically the past two and a half years, really since the highs that it saw of 121 and change back in 2022, right, when the Russia-Ukraine war was, breaking out. But if we do find a resolution here, if Zelensky accepts, if Putin accepts, and both sides, agree to a peace deal, then we could see, basically, construction come back into Ukraine. Obviously, both sides, Russia and Ukraine, have been beaten up. Infrastructure's been wrecked because of the war, so all that needs to get rebuilt. And you're also going to, see the agricultural side for both countries need to pick back up again, right? As sanctions get, released and economies for both respective companies can start to return to somewhat normal, stable conditions. That's an environment where I believe Intrepid Potash could come in and you could see a very interesting recovery in this play. Again, we saw highs of 121. It's currently sitting just a hair under $25 a share. So an interesting play, one to have on your radar. And, according to GPT, why IPI could run if the Ukraine war ends, just to kind of break it down here. Potash and fertilizer names were heavily distorted by the war. Russia and Belarus are two of the largest global producers of potash. The war, plus sanctions, choked supply chains and raised fertilizer prices globally. If the war ends or sanctions ease, global potash supply increases, normalization, demand stabilizes, but pricing volatility drops. Western producers like IPI can see a sentiment re-rating because supply chains become predictable, input costs normalize, international buyers increase forward orders, investment flows back into agriculture inputs after years of elevated geopolitical risk. Even if potash prices don't spike, certainly returns, and markets love certainty. So, this is a stock that's been beaten up since 2022. But it is very interesting. And as GPT lays out here, IPI is a small cap, thin liquidity, and extremely event sensitive. When macro regimes shift, this type of stock can have outsized percentage moves, because it's a lower flow, because it's higher beta, retail trader flows pile in, algo sensitivity to macro keywords. So interesting play, and it's why I bring up these peace talks that are now happening according to President Trump. So we will keep tabs on that and also tabs on IPI. So something to have on the radar. All right, moving on to this piece from MarketWatch. A Fed rate cut next month seemed doubtful. Here's why it's now likely to happen. So over the past month, there have been sharp public disagreements among Federal Reserve officials about the likely path of the economy and the appropriate level of interest rates. These public debates led economists and market participants to doubt there was enough support within the Fed for another interest rate cut at the central bank's upcoming December 10th policy meeting. However, in the last few days, perceptions have shifted, and investors and economists now think the Fed is likely to cut. What sparked this turnaround? Economists say Fed officials are coalescing around another rate cut due to continued concerns about the health of the job market. The deterioration we've seen in the labor market, I think, is enough justification for the Fed to cut in December, said Tom Porcelli, chief economist at Wells Fargo, in an interview. The first important official data released since the end of the government shutdown showed the unemployment rate rose to 4.4% in September, the highest level in almost 4 years, and there was some indication that the low hiring, low firing dynamic seen in the labor market might be on the cusp of worsening. So another thing that, also helped on Friday is we got a Federal Reserve member from New York that basically had some, dovish commentary, I guess you could call it. As this article says, in an interview, Josh Hurt, senior economist at Vanguard, said it was his personal view that the Fed would cut rates. He noted how on Friday, New York Fed President John Williams, a close ally of Fed Chair Jerome Powell, made a strong case for a rate cut and said he, quote, still sees room for a further adjustment in the near term. This moved financial markets as the expectations of a December rate cut rose sharply to above 70% from near 40% the day before. So as of right now, if we talk about the rate cut odds, right, they have been all over the place. Taking a look at the CME website here, FedWatch tool, if we take a look at the odds for a 25 basis point cut on December 10th, a month ago, it was baked in, right? It was a 95% chance we were going to get it. If we take a look at a week ago, it was 44%. If we look at a day ago, it was 71%, and that's where we're at now. So I've seen the odds for a December rate cut as low as, mid to high 30%. So to go from that to 71% off the back of, Fed Speaker Williams on Friday is pretty significant. So it does appear that we may be in a position to be getting a December rate cut. And if we do, as I was saying earlier, small caps, the IWM, right? Those are companies that are heavily dependent upon the Fed rate decision because of financing, right? And things of that nature, just operations. They're just more dependent upon interest rates than, mega cap stocks are. So for Opendoor in particular, this is excellent news. The fact that the odds have gone up. We'll see what happens on that December 10th meeting, of course. But, if we end up getting a rate cut, that could be a relief for the market. And one of the two things that have been weighing the overall market down right now, one has been this, but then in addition to that, the AI valuation concerns, which just seemed to me at least that NVIDIA on Wednesday kind of put to bed. And so if in addition to that, we get a rate cut in December, I think all bets are on for the Santa rally into year end. So I guess we'll see what happens there. But as of right now, that's where we stand. We'll be keeping tabs on that and seeing, what happens with that Fed interest rate probability as we get closer to that December 10th meeting. All right. And another piece here from the Wall Street Journal. It was supposed to be crypto's year, then came the crash. Excuse me. So the crypto market turmoil only intensified this week, with Bitcoin shedding more than 10% and over $10,000 in value. In the 24 hours leading up to Friday morning, more than $2 billion worth of leveraged crypto trades were liquidated, pushing Bitcoin below 81,000. According to data from CoinGlass, the largest cryptocurrency is now on track for its worst monthly performance since June 22, when the collapse of crypto lender Celsius Network plunged the market into what became known as the crypto winter. Some traders have said the drop in Bitcoin may be forcing some other selling in the traditional markets, which swooned this week. So every group chat I'm in, everyone wants to know who blew up, said Nick Carter, founding partner at Castle Island Ventures. You can't make sense of it all now. There's a general malaise with no exact catalyst to say this is why. This was supposed to be crypto's year. There was a perfect storm of a crypto-loving White House, Wall Street adoption, and friendly legislation that put it close to more than a decade of antagonistic U.S. regulation and prosecutions. In a sense, it worked. Divisions between traditional and crypto finance seemed to blur. Portfolio managers are modeling cash flows based on the yields of stable coins. BlackRock and Fidelity, among many others, hoovered up Bitcoins for ETFs. Banks like Bank of New York Mellon and JP Morgan Chase wanted to put funds on the blockchain, while digital token companies like Ripple tried to become banks. So, there's been a lot of hype around crypto and a crypto-friendly administration. Unfortunately, right now, we're seeing a lot of unwinding of a lot of leveraged positions, unfortunately. And something I heard Tom Lee from Fundstrat say was that if we take a look at MicroStrategy, this is basically a great way to get an idea of MicroStrategy is a great way to get an idea of where the overall crypto market might be heading, because it's really the only way to what am I trying to say? It's the only way to basically leverage or hedge rather against your position in crypto. So I am struggling to pull it up right now, but basically MicroStrategy is, it's here we go. Strategy, MSTR, had it backwards. So look at this insane drop off on MicroStrategy. I mean, are you kidding me? This thing was at 450, had a spike to 543. It was down to 170 on Friday. So essentially Tom Lee was saying that if you have $1 billion Bitcoin position, you can't just very simply hedge against that in the crypto space. However, you can do that with options on things like MicroStrategy. And so this might be a way to, get a gauge by paying attention to the options chain on MicroStrategy. Will give you a gauge of how some of the larger players in the crypto space may be hedging their overall positions, is essentially what it was saying. You had a put to call ratio of 0.60 on MicroStrategy as of Friday. So, very, very interesting stuff from Tom Lee. I love his content. But yeah, as of right now, I mean, crypto is taking it on the chin. And traditionally, the way crypto goes is the way the market goes. It was supposed to be, a hedge against the market, against equities. But in reality, what is crypto? It's a risk on asset, which is something I say on the show all the time. And so if we see money leaving crypto and crypto coming off, it would make sense that the same thing would happen to equities. And essentially, that's kind of what we saw. We saw Bitcoin turn to the downside before the equity market did on Thursday. And, if you zoom out a little bit, you can see where crypto has come off before the equity markets, the S&P did. So this is definitely something to pay attention to. Like I said, if we don't hold this 80,000 area on crypto, we might be looking at a washout to 70,000 before we turn back around. However, those rate cut odds in December creeping back up again should be bullish for the crypto space, should help out crypto. So this is something we will be paying attention to, and especially heading into the holiday weekend. Everything else will be closed equity-wise, right? But crypto will be open, so I'll be curious to see what kind of action we get headed into Thanksgiving weekend. All right, let's move on to the economic calendar. So again, we have a shortened trading week. Thursday is Thanksgiving. The markets will be closed. And then on Friday, November 28th, the markets will close at 1 p.m. Eastern. So a shortened trading day there and a short trading week. So really, all we have is Monday, Tuesday, and really I wouldn't even count Wednesday. Wednesday, you're going to see a lot of volume start to dissipate as we head into Thanksgiving there. But especially Monday and Tuesday are going to be big days. And as far as data goes, we're going to get PPI data on Tuesday, November 25th. So this is going to be very, very important. Producer price index, right? This is coming out at 8:30 a.m. Eastern, and I would venture to say that this is probably going to have an impact on interest rate decisions. Producer price index measures the change in the price of goods sold by manufacturers. So that comes out on, again, Tuesday, November 25th. And this will give the Fed an idea of where inflation is at. So that's going to be a big one. Also, retail sales come out as well on Tuesday. So really that's what you're looking at there. Inflation data, retail sales, Wednesday, November 26th, initial jobless claims at 8:30 a.m. Eastern. And then core PCE also coming out. That's going to be another big one to pay attention to. Personal consumption expenditure. This is the Fed's preferred inflation gauge. And we have a forecast there. On core PCE year over year for September of 2.9%. So if that comes in line or slightly lower, I think the odds of a December rate cut go even higher because it tells the Fed that they don't need to concern themselves as much with inflation based off the data, which is what they go off of, and instead they can focus on the labor market, which is in need of help. So that's what we got. And the new home sales come out at 10 a.m. Eastern on Wednesday, November 26th. This is an important economic data point to pay attention to if you are an Opendoor investor. Previous number of 800,000, forecast of 710,000. We want to see if liquidity is there, if we beat that number or not. So that's what we got for the economic calendar. Now, as far as earnings go, we're basically winding down Q3 earnings season at this point, but nevertheless, you got a couple earnings on this holiday trading light week here. We're going to get Zoom reporting on Monday after the close. On Tuesday before the bell, you're going to get Neo, Dick's Sporting Goods, Burlington. After the close on Tuesday, you're going to get Dell, HP. And then Wednesday before the bell goes ding, you're going to get John Deere, Deere & Company. So just a couple of earnings coming out this week. But overall, that's about it, folks. And then as far as the following week after Thanksgiving, you got a couple other ones in there like Dollar Tree, Macy's, some other, earnings as it relates to the retail, the consumer side of things as we head into the holiday season. That'll be very interesting to see basically what is the health, the strength of the consumer. We'll get an idea from those earnings reports there. So that's what I got for you on this market prep episode. A lot of things going on right now, especially on the geopolitical front. We're going to keep tabs on that war in Ukraine between Russia and Ukraine, and really what's going to happen with these peace talks that President Trump is proposing. If everything goes well, Intrepid Potash could be a very interesting swing play, in my opinion. Make sure to drop a comment, though, and let me know what you think about that. Let me know what you think about Opendoor over the next couple weeks, next couple months. Are we going to get back to 10, go above 10? Let me know what you think about the warrants. Any other plays you want us to keep track of here on Stonkcast. As always, appreciate the support. We will be back, as always, for the midweek check-in on Thanksgiving morning, folks. We stay on track around here, so look forward to that episode. Stay vigilant out there. Make sure to share with a buddy. Don't forget to like and subscribe. Follow us wherever you listen to podcasts. And folks, as always, plan the trade and trade the plan. Have a good one.